Dr. Adesina, in your speech earlier, you called for reforms of the global financial architecture to better align with current economic conditions and the situation that many countries face today. Now, if you don't mind, what I'd like for you to do is use this opportunity to break that down a little bit and explain why this is critically important for African economies.
Thank you very much, Victor, for that. I think the thing to bear in mind is we are clearly, and I'm talking globally, we are clearly off track when it comes to sustainable development goals and the amount of financing that we need to be able to do that. Of course, we are a multilateral financial institution. We're doing all the best that we can. But we've got to realize that we are facing a world today in which we have multiple challenges. We have geopolitical issues that both Professor Jeffrey Sachs and Madam Minister have said. You know, we have an issue with regard to how we feed ourselves. We have a problem in which the world can't feed itself because of the conflict in Ukraine, which has added to major problems. The third issue we have is the supply chain disruptions. We had that during COVID. Now we have that during the situation now with food and agriculture. We have rising debt in many of the countries. And as the chief economist mentioned, you have a situation in which as tightening monetary policies are being pursued, United States, Fed raises interest rate, you have EU interest rates also raised, and that means that the debt service costs are continuing to balloon. And I hear what my friend, Professor Jeffrey Sachs said, about, okay, maybe we don't have too much debt. But the fact of the matter is that our debt to GDP ratio, okay, maybe it's okay, it's probably 68%, 70%, but we still have significant amount of debt. And how do we make sure that developing countries are able to have the resources they need, okay, to be able to fast-track their development? So when it comes to the global financial architecture, what do I think really needs to be done? First, I think it's very important for Africa to be better represented in the global financial systems that we have. Okay, you've had reforms being talked about that are very much needed. So I think both in terms of the International Monetary Fund, we have better representation. The second is to also make sure that we are focusing on optimizing the global financial architecture. There are three components to that. First, you have the multilateral financial institutions. And second, you have the International Monetary Fund. And third, you got the private sector. So when you take the international monetary, the global financial architecture, we need to work better, a lot more in partnerships as multilateral financial institutions, which we do. We work very closely with the World Bank, with Asian Development Bank, with the European Investment Bank, European Bank for Reconstruction and Development. We need to pull our resources better. So the key word on that is partnership. The second is we need to let the regional development banks, maybe I'll use both sides so that I can turn to you sometimes, the regional financial institutions to focus on regional issues, right? And have maybe the World Bank and IMF focus on the global issues. So there has to be a connection between that global and that regional. The third, I think it's very important, is to ensure that something like the special drawing rights, of course the IMF has. There was about 650 billion of that was actually released, of which Africa got just about $33 billion. But if you take a look at the IMF focusing on global macroeconomic stability, right, and the development banks like ourselves focusing on what we do better than anybody else, which is on sectoral things, on agriculture, on health, on infrastructure, and things like that, that's our raison d'etre. And so how you actually take that and you link it to global macroeconomic and financial stability role of the IMF, that means there's a complementarity in the global financial architecture. We should not be competing for resources. We should be complementing ourselves. And I think the special drawing rights provides a very good way to actually do that. So take, for example, we are working together now with the IMF, and we know that with IMF, if we get the special drawing rights for Africa, which African heads of state have asked for, that Africa should get about $100 billion. If some of that comes to the African Development Bank, we can leverage that 4 times. So I think IMF providing that for countries, but some of that coming to the African Development Bank allows us to have a multiplicative effect. So you have a lot more impact. So a $10 billion to the African Development Bank suddenly becomes $40 billion to Africa to focus on health, on agriculture, infrastructure, youth employment, health, and all of those things. So that complementarity, in my view, it's very, very important. The third area I want to say is take a look at global capital. We have trillions of dollars in assets under management globally. The issue is, how do we get these trillions of dollars to go into infrastructure, to go into health, to go into agriculture, to go into financing digital infrastructure that our continent needs very, very well. And so for these, I think to optimize it, we need to do 3 things. First, we need to work together, IMF, ourselves, and the global assets under management, pension funds, sovereign wealth funds, to de-risk their investment in infrastructure. I think that's fundamental. The reason why they don't do it is because they think the risk of it is too high. Second, we know that in Africa we have an infrastructure gap of $68 billion to $108 billion a year. But if we are able to have infrastructure as an asset class in which the global pension funds and sovereign wealth funds can invest, I mean, that is nothing. We can really do the infrastructure job very, very well. And that also means that in Africa, we have to make sure that the pension funds and sovereign wealth funds see infrastructure as an asset class. And that is where we as a financial institution can really do quite a lot with regard to that. And the last thing that I want to say with regard to this is we need to do better coordination. The chief economist, acting chief economist, talked about the work we're doing with the IMF. I'm working very, very closely with IMF. And I'll use this to come back to the issue of debt. We, as our part of the global financial architecture, have to work, and we continue to work, improving local capacity, improving domestic resource mobilization, improving macroeconomic and fiscal stabilization of our countries. I think, Professor Rama, you have, what's the name of your academy? The Africa Public Financial Academy, that will allow us to build the capacity of countries to actually manage their public finances and to reduce the level of fiscal deficits that they have. So when we play that role at this level in Africa, we complement the IMF at the global level in terms of macroeconomic and fiscal stabilization. So we are all working in sync. We are not competing. And I think this is very, very important. So I'll end by actually saying what Professor Jeffrey Sachs said. For the global financial architecture to work very, very well, and for regional development banks to play the role they should play on the ground, they actually need, guess what? More capital. They need more financing to be able to do that. So there is an issue with how we capitalize appropriately, the right capitalization of the regional development banks to play the role that they play. But it's not just that. We as regional development banks are working for the African Development Bank, for example. We are working to see how we also optimize our balance sheet to make sure that we stretch our resources well. We are today investing quite a lot on synthetic securitization that allows us to take some of our assets off our books, public books, private books, and to transfer some of those to the private sector. That's a way in which we leverage our assets. So I think the issue of proper capitalization of multilateral development banks, in particular the regional development banks, it's important. I think we need to collaborate a lot more in terms of what we do. But on the macroeconomic and on the fiscal side, we need to coordinate better with the IMF so that we can manage the debt issues and so on. But then we have to make sure that the sum must be, the outcome must be greater than the sum of its parts, which means IMF, my dear sister, is doing a great job there, Kristalina Georgieva. We work together focusing on macroeconomic stabilization, make sure fiscal stabilization is done, but we have the resources to support African development, sectoral development. It's when you have those things working together, I think then you have a real optimization of the global financial architecture for accelerating what it takes to achieve the Sustainable Development Goals.
Thank you, Dr. Adesina, for a very, very robust response there. If I could distill the essence of what you've just shared with us, again, we live in a global village. And in a global village, we all need to work together. You've talked about optimizing the global financial architecture through partnerships, global and regional approaches to development, seats and voices at the table that allow us to have enhanced complementarity and coordination, which requires, again, a global and a regional approach to the issues that we face in our global village. Dr. Adesina, over to you for your closing comments.
Thank you very much, Victor. I just want to close by first and foremost thanking Professor Jeffrey Sachs for joining us today. And thank you for all of what you said. I think the critical things that you said about Africa's growth rate, 7%, is what you expect that we will have, 7 to 10% by 2023 to 2063. It's that kind of sustained growth that is very, very important. And I just want to make a comment that we are not, as good as 3.8% or 4% is when you have global growth rate of 2.7 and 3.2, 2023, 2024, that's fine. But you see, we must recognize that we are behind the rest of the world. And therefore, our growth must be accelerated. We need 7, 10%, double-digit growth for a sustained period of time if we are going to be able to drive down poverty. I always say that Africa should not become a museum of poverty. We have to make sure that we are supporting macroeconomic stability. We are supporting fiscal policy reforms that will allow us to have the resources at scale for accelerated development of Africa. I am not satisfied with 4% growth. I am not satisfied with 6% growth. We need to have double digit for a long period of time. As Professor Jeffrey Sachs said, if we are going to actually see Africa become, that global player that Africa really should be. It's a good start, but we have to set our ambition that we must go to double digit over a longer period of time. I also want to say that on the point that Professor Jeffrey Sachs said on this issue of debt, I just want to make 2 points. One is to thank the shareholders of the African Development Bank. We just had our replenishment of the African Development Fund. And many of you are here, my executive directors are here representing their shareholder countries. Many of the other ambassadors of the countries are here. I want to thank you for that, because we were able to raise $8.9 billion, which is the highest we have ever raised for the African Development Fund in the history of the fund since it was established more than 50 years ago. So please clap for our shareholders, and then we need to leverage all of that to have more resources. And it's a good opportunity for me to also thank the deputies of the African Development Fund for agreeing that we can have a conversation at our board now on how we use the equity we have in the African Development Fund to further leverage capital on the global capital, financing of the global capital markets, exactly what Professor Jeffrey Sachs was saying, at a lower interest rate, long-term money to support the development, accelerated development of these very fragile, low-income countries, which are the ADF countries. We call them African Development Fund countries. So it's a great opportunity for me to make a pitch to my board of directors, they're all here, for their support of that, Because with $25 billion in equity that we have in the African Development Fund, if that fund is rated, and we did a shadow discussion of what a shadow rating may look like for it, it probably will be a AAA rated financial institution, Jeff, just like the African Development Bank window is. If that is the case, then we can actually raise on the global capital market about $33 billion of additional financing to accelerate the development of these low-income countries, the ADF countries. So I just want to say that that will help them significantly, you know. And we did our own analysis that actually shows, Jeff, that if those countries that have gone to the global capital markets, the Eurobonds and all of those things, had actually borrowed those monies from the African Development Fund at the rate, even the bank at the rate, we will have probably saved themselves more than $20 billion in interest payments, which is what you were basically talking about, Jeff. So I think the issue of capital adequacy for the African Development Bank, for the other multilateral development banks, and it's very, very important to us to be able to leverage more capital on the global capital markets. We realize the amount of resources is a lot. And it's not just us, the bank, that will do all that. We have to work, and we are working very closely in more partnerships, strategic partnerships with multilaterals, strategic partnerships with bilateral institutions. Very, very important. But most importantly, we have to leverage private capital. I can't say that enough. Private capital is what we really need to leverage a lot more of. So a lot of what we said, Madam Governor, in this report about improving macroeconomic environment, improving the fiscal environment, managing your debt properly, investing in policy reforms, as Professor Orama said, digitalization, e-governance, tax administration, all those things that are really well explained in this report are things that will make the investment environment attractive to be able to attract private capital. I'm very big on the issue of private capital, and I think we need to do a lot more. The other thing that I want to say is we don't eat numbers of GDP. GDP is fine. It's a gross domestic product, the value of goods and services produced in an economy. But people don't eat. In fact, some people even think, if you go out, I'm an economist, you go out and talk to people with GDP, some people think it's actually a political party, a political party or something. They don't understand what it is, right? People don't eat it. So I'm just trying to use that to make a point that what's important is how the GDP growth rate translates into impacts on the lives of people. So it means, therefore, Professor Orama, as we continue our work in the rest of the bank, we have to look at distributional issues. In fact, how does the GDP affect rich countries, higher income countries, lower income countries, and what are the impacts directly on the lives of people? This is why I want to make a pitch that we continue our work on structural transformation of African economies. That structural transformation is crucial. Diversify our economies. Make sure that we have value addition for everything, minerals, metals, oil and gas, whatever things that we have. We have to add value to every single thing that we have. We have to make sure we are investing more in infrastructure. The African Development Bank is investing in a lot of infrastructure, and we should continue to do more on infrastructure. I think to get the 7 to 10% that Professor Jeffrey Sachs is talking about, we also have to take advantage of new opportunities. Green transition, energy transition, provides enormous opportunities for Africa, and we should tap into that. The last two things I want to say, maybe three things. First, also, is regional trade that Madam Minister, the governor, talked about. We need to invest and make sure the Africa Continental Free Trade Area is not just a trading area. Look, we've been trading forever. But if you are trading maize to me, and I'm trading sorghum to you. We are going to be very poor together in a very efficient way without tariffs and non-tariff barriers, because you are trading at the very bottom of the value chain. And my pitch is that to get what Professor Jeffrey Sachs was saying to us, that we have the ambition, is that the Africa Continental Free Trade Area must be an industrial manufacturing zone. And that's what Professor Rama was talking about, industrial policies, wherein we manufacture high-value added products. Whether it is the North American Free Trade Area, or whether it's the ASEAN area, whatever it is, every time you have free trade area, they prosper because they trade in value-added industrial products. So we must industrialize. It's one of our high fives of the bank, industrialize Africa. That is fundamental if we are going to spur a greater thing. And lastly, when I was talking about distributional issues, we have not showed you in this report what is happening to the young people on the continent. We have not showed you what is happening in terms of women. I think we need to focus a lot on these distributional issues. Unemployment rates way too high. You know, I just gave a lecture yesterday about education, which I sent to a function in Nigeria. And I was just amazed when I was just preparing for that, how low the social and private returns to education in Africa really are. And so why would people invest in human capital to do the fourth industrial revolution, all the things that Professor Rama talked about, if we are not able to create jobs? So we got to focus more on making sure that this GDP growth creates jobs for our young people. So that, you know, they're not going to Europe and they're not going to the United States and not running all over the place. You know, I'm all for orderly, migration. But disorderly migration out of distress, it brings shame to us as Africans. We must have a continent that is growing sufficiently high, able to create quality and decent jobs, to keep its youth population on this continent thriving. That's what we should do. We're not there yet, but that's what we have to do. Make sure that we are growing faster, we are growing well-quality growth, and we have distributional issues, and we are able to keep our young people on this continent thriving. That's the only way we develop with pride. And if I may just end, what can we do without governments? Nothing. In the beginning, Professor Orama mentioned that, and thank you very much, Professor Jeffrey Sachs, for what you said about Africa's place at the table. And I think it's part of what you were saying, what I was saying about the global financial architecture, or global institutions, multilateralism, more generally. We need to be more represented there, and I think President Joe Biden mentioned this in the US-Africa Summit, which is fantastic, for Africa to have a seat at the G20, yes. But also Africa should have a permanent seat, or more than one, at the United Nations Security Council, where these issues of development are raised, so our voice and our participation is important. But I want to thank the African governments, and Professor Rama said it, despite, and Professor Jeffrey has said it, despite all, against all odds, high interest rate environment, COVID-19 challenges, we have a situation with global conflict, geopolitical risks, we have our own security issues that Madam Kaba said in the country, debt issues, lower commodity prices, volatilities, all those things. In spite of all, Africa still was able to keep its head above water, higher than the global average. You know, I learned how to swim, not only when I became president of the bank. And I learned to swim as a risk management strategy because I didn't want the president of the bank to go and drown somewhere. And when I learned how to swim, the first thing I was told is keep your head above water. Then you can swim better. I think Africa, from this report, is keeping its head above water. It can get air, it can move more, but it needs to do more. And we need, therefore, to support our African governments to do more. We need to build capacity of our African governments. We need to help them to expand their fiscal space. help them, as Madam Kaba, the Minister of Finance, do their work on fiscal consolidation. As Professor Jack Trisac said, we need to work globally to make sure that African countries, I still come back to this, Jeff, and I know you agree with me, that I think we are running up a hill with a backpack of sand on our back. And we can't succeed with that. So I really do think we need to make the global debt management issue for Africa better. Jeff, I was just looking recently, I looked at the yield curves. We were talking about the yield curves of Africa have moved up. The interest rates have gone up. You look at the basis points. I was looking at this report. They have, I think it's Professor Rama, the situation for, I think it's Nigeria, it's about 600 basis points in terms of yield spread. We have Egypt, the minister, the ambassador is here, it's about almost 700 basis point spread. But you look at Ghana, 1,500 basis point spread. And so there's something, as Professor Sachs said, we need to make sure that the Africa risk issue, that Africa risk premium is addressed. Why are we borrowing capital at a very, very high rate? And secondly, how do we, when we draw global macroeconomic policies, monetary tightening that you brilliantly explained in your report, has global consequences? Because Africa has a lot of debt, and then the amount of servicing of that debt continues to go up. So we need to look at that. And therefore, I want to commend the Professor Rama and your team to please continue the work on public financial management. We need to keep the debt levels down. We need to increase domestic resource mobilization. We need more private sector, and we need more global finance. In the end, this report will have just been a bland report if you are not here. If you are not sitting here for us to present the report to you, and I hope that this report has shown you the challenges of Africa in the midst of a global set of crises, and how Africa is, regardless of that, still keeping its head above water. I would like to thank all those that have joined us from around the world. You have listened to our story. If there is a message that I want to leave you as I wrap up this session, have faith in Africa, have confidence in Africa, and Africa will continue, with the support of the African Development Bank, to do the right things macroeconomically, right things fiscally. And those are the things that will make sure that our pace of development picks up to what Professor Jeffrey Cass said. Why not 7 to 10%? That's le défi, Madame le Gouverneur. Le défi, 7 to 10%. Let's keep working. Keep our head above the water. I'm sure we'll swim across the pool. Thank you very much for being here.